This is by far the best profitable day trading strategy for beginners with zero experience. Now, this strategy is going to be very, very simple to use. What you want to do is pull up any stock or future that you're going to be trading, and what you want to do is break it down to a 5-minute time frame. Now, from here, what you want to do is you want to identify what is the overall trend. Is price in an uptrend, which an uptrend is where price is setting higher highs and higher lows, or is price in a downtrend where we are setting lower lows and lower highs? If price is in consolidation, we do not want to use this strategy. So once we've identified the overall trend on the 5-minute time frame, we want to look for a point in price where we made a strong aggressive move to the upside or a strong aggressive move to the downside, which is going to dictate is price in an uptrend or is price in a downtrend. Once we determine the trend and we find our impulse points, we then want to identify our pivot low and pivot high. So the lowest point of price action before price made a strong aggressive move up, and the highest point of price action before price started to pull back. What we want to do from there is take the Fibonacci retracement tool. And because price is in an uptrend, we want to use the Fibonacci retracement tool to understand where could this potential higher low end up being to then catch the next move up. So from here, what we will do is we will take the Fibonacci retracement tool and we will draw it from the pivot low to pivot high. Now, personally, when using the Fibonacci retracements, I only use the 50 and the 61.8% retracement. By default, yours is probably going to have like the 236, the 382, the 786. Uncheck all of that and only keep the 61.8 and the 50%. Now from here, what we want to look for is for price to trade back down into the 50% or 61.8% retracement and look for bullish price action, making this area support. And if we can get that, we can then look for another move to the upside. So a really good example of this is going to be on NQ today. As we can see with NQ, price is very clearly in an uptrend. We made a very strong move to the upside, making a new high, and then price started to pull back. So like the last example I just showed you guys, we then want to identify the lowest point of price action before price made the very strong move up, and then the highest point of price action before price started to pull back. So from there, we will take our Fibonacci retracement tool and draw it from pivot low to pivot high. Now, as we can see, price came down, hit the 50% retracement once, twice, 3 times, and then we rallied back into the high a day. Now, if we go to replay mode, I want you guys to see how this trade would have played out and what I would have looked for to get long. And actually, fun fact, I did end up getting long off of this level. I live in Denver, so this is going to be mountain time, which is 2 hours behind New York, and I have this trading view chart set to New York time. So when price came down and hit the 50% retracement right here, you can see that that is at 12:10 New York time. I got long at 10:24 Denver time, which ended up being on this candle right here is when I ended up getting long. Now, personally, I would have entered long on this candle right here. I just wasn't looking at the charts at that time. But what I am looking for when price trades down into the Fibonacci retracement, again, we're looking for a potential higher low to then catch the next move to the upside back into the highs, is exactly what we see on this candle right here. You can see that we get a long lower wick off of the 50% retracement, and then the elevation in the volume by itself is enough confirmation for us to look for a long entry. Price would not have this long lower wick and bounce off the 50% retracement if there was not buyers present in this volume right here. So with this volume compared to every other previous volume bar, there is a huge elevation telling us that buyers are present and they are likely going to try to push price higher. So what you would look for is a long entry with a stop loss right below this wick. If price broke below this wick right here, you would stop out and then watch again for another entry at the 61.8% retracement. So if you ended up going long, again, your stop loss is right below this wick, so you're risking about like $200, and we already know that price rallied into the high a day, pretty much high a day for around $1,300 profit. So that is how you would use price in an uptrend, and this happens a lot in the market. Let's actually find another example on the 5-minute time frame. So if we look over here, we have the same exact thing. Here's the lowest point of price action, very strong aggressive move up. We top out right here before price starts to pull back. What are we going to do? Take our Fibonacci retracement tool, pivot low to pivot high, and notice what happened. Price right off the 50% retracement, and we started to get a little bit of elevation in the volume. So what are we going to do? We are going to look for a long entry, and again, we're going to use the replay mode so you can see how this plays out. We hit the 50% retracement, we bounce, it's a smaller candle, but just as much elevation in the volume, telling us again that buyers are present at this 50% retracement. You can look for a long entry with a stop loss right below this 50% retracement, which is about like 20 points. Maybe a little bit more. But if price were to break below this area, you would simply stop out, wait for price to trade into 61.8, and then you could look for another re-entry. But as we know, price ended up trading a lot higher that day, and you were able to catch a nice move to the upside. So that is how you are going to use the Fibonacci retracements in an uptrend on the 5-minute time frame. Now, if we go back on over to ES, when price is in a downtrend, what we want to start looking for is again that lower low and lower high. Once we identify the lower low and lower high, we then want to find our impulse move, so the highest point of price action before price started to flush to the downside, and then the lowest point of price action before price started to bounce back up. What we will do from there is take our Fibonacci retracement, because now what we're trying to figure out is where is this potential lower high going to be. So we will take the Fibonacci retracement, we will draw it from pivot high to pivot low, and we will look for price to trade back up into the 50 or 61.8, make it resistance, look for bearish price action and bearish volume to then catch the next move down. So let's find some examples of this. This is based off of a higher time frame key level, but as we can see, it meets the same exact criteria. Our higher lows ended up being over here, and as we can see, we completely flush below them, which is going to put price in a downtrend. So again, this is on the 1 hour time frame on ES. We have our highest point of price action and then our lowest point of price action before price started to bounce back up. As we can see, once price traded into the 61.8% retracement, it rejected it here, came down, rejected it here, here, and here, and then came down until we finally broke above it. Or NQ also had a really good example of this. Again, if we go to the 1 hour time frame and we find that same exact drop, price ended up flushing to the downside, breaking below this low, and even this low, which is going to change the trend overall to a downtrend potentially. We then want to find our highest point of price action, lowest point of price action, and look at what happened when price traded into the 50% retracement. We rejected it. Not a huge move to the downside, but again, this was still tradable. And even over here is another really good example. And this is one that I actually ended up trading. So we have the highest point of price action, lowest point of price action. If we look to the left, we can see that price took out this low and this low. So let's break it down to a 5-minute time frame, and let's go to the day that we actually ended up hitting this 50% retracement, so I can show you what to look for in the price action to get short. So as we can see, price trades up into this 50% retracement, rejects it right here with an inverse hammer, gravestone doji, whatever you want to call it. Not the best volume, but at this point, the risk to reward is still really good, and it is a higher time frame key level. So I did end up taking this trade. I even did it live here on YouTube as well as live in the Discord. Go short, and then literally your stop loss is right above this candle. So you're not risking too much. And as we can see from there, price ended up flushing significantly lower. You're risking about like 750 bucks, maybe like 750 to like 800, depending on when you stopped out. And price at this point is up almost 3.5K from the entry. So again, using the Fibonacci retracements, it's very easy to do. Here's actually another uptrend example right there, 50% retracement, boom. But again, all you want to do is identify your lowest point of price action, your highest point of price action when price is in an uptrend, or again, the highest point of price action and the lowest point of price action when price is in a downtrend. Wait for price to trade to the 50 or 61.8% retracement. Look for supporting price action and ideally supporting volume as well. If everything confirms, take the trade, and then your stop loss is right on the opposite side of the fib. Now, if you guys did find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day. I'll see you guys in the next video.